Why did the PBOC finally bite?
There are a couple of constituencies they have to address. I mean, one, I don't think you go from 630 to 665 without there being some implicit tolerance of this. And it's risky from the point of view of negotiations with the U.S. There's not much the U.S. can do about the currency, but they certainly can complain about it. So I think that for markets, this is a message from China that they're not going to go full scale into a trade war, at least right now. But the other constituency that they have to worry about is the rest of Asia, right? Because their competitors have been appreciating against China, becoming less competitive against the rest of the world. And they actually don't want to make those guys angry with Chinese currency policy.
So there's a couple of issues we need to get through, Luke. But first, I think we can conclude at this point that this was tolerated rather than engineered.
I think that's one of the upshots from this, and where I'm amused at where the line in the sand was drawn is that it was unclear even in these last few days when the yuan was still falling that markets were really freaking out about it on the currency side in terms of non-deliverable forwards, what they were saying, or the onshore-offshore basis. None of those were really screaming alarm bells. So this is something more China saying, like, this is something that can happen. This is something that maybe for domestic economic fundamentals, new export orders, that sub-index of the PMI, that's been negative for or below 50 for 3 straight months. It's something they probably maybe needed for support, but do not want to be sending alarm bells about.
There are quite clearly domestic forces at play here as well, Andres, and I just wonder whether that was what was really happening here with the Chinese. An acknowledgement that they couldn't have a repeat of the summer of 2015 and early 2016, and that it was about time really to let some of the steam out of this because we've had a stronger dollar through most of 2018.
Yeah, I think that's the case. You know, the Chinese are not immune to making mistakes, but they tend to not repeat mistakes. And I remember clearly actually traveling to China, speaking to officials there. This is prior for them letting go of the currency in essence. And we asked them point blank, are you going to mess around with the currency? They say, absolutely not. And then they did, and then they paid dearly. So I think this is something that they're not going to allow to repeat. Is it a message? Absolutely. But I don't think they're going to play with fire, you know, getting to that 6.9.
But simply by tolerating it over the last month, simply by tolerating the move to the extent that we have seen, that's sending a pretty big message to the rest of the world, isn't it, Steve?
I think it's sending a signal. But I think it tells you what a weak hand they have, right? Their equity market
a good point.
Is down, way down. There are concerns about Chinese debt, Chinese financial markets. If the currency is the only card you have to play, you don't have very good cards.
And at some point it goes too far and you start to worry about capital outflows again, and that becomes the big story in China. We're not quite there yet, are we, Luke?
No, I don't think so, and that's one thing that Brad Setzer, kind of Council for Foreign Relations, he wrote perfectly timed blog post yesterday, kind of just highlighting, okay, this is China's policy choice, so I can see it from 2 different ways. However, the danger on the outflow side is actually from portfolio inflows, which have been previously kind of okay, that drying up, plus the true capital flight, which is the people with suitcases going to Macau and gambling type of capital flight, really ramping up. Those were the channels to worry about. And when you get the kind of price action you've had in Chinese assets, well, why are you going to be holding those?
That's the kind of capital flight I think most people enjoy.